Today's Tuesday, August 19th, and we're stuck in consolidation. We have two liquidity pools of interest located on the buy side and on the sell side delivery of the program. And yesterday, what I wanted to leave off was that I ended up coming back here for the PM session, and I still was aiming for that buy side up to here on the New York AM session. You can see it in my video that this is the liquidity pool that I was favoring, as well as eventually reaching up to the London buy side liquidity pool. But um, it was very, very choppy, as you can see. Like, who would want to go in there and trade live money with this, right? Right? I mean, it'll make sense, but yeah, super weird. But eventually, after the 6 p.m. new day started, price expanded aggressively, going up higher, tackling these buy side liquidity pool. Now, I have marked this out as a miniature sell program. As I was saying, I have marked this out as a miniature sell program so that price can continue to seek lower prices while it's inside this higher time frame discount program. Buy side delivery program is what I keep saying it. So it needs to keep going down to discount to acquire more sell stops so that smart money can accumulate more longs positions so that they can take it up higher. But just look at this choppiness. And this has been something that has been affecting my mindset going about these past couple of days. Just look at the constant back and forth of transactions that's been happening. It's been high resistance every day, and it's so challenging to go in there and seek for opportunities around these times. Uh, we had that transition over from, in comparison to the July price action, look at how the expansions were aggressive, going up and down, up and down. And then we entered August, and as soon as August started, literally, it was just quick price action, and then suddenly just choppiness, man. So, um, yeah. So if we're in this buy program from low to high, right? So we're seeking for entries to keep going long, right? Keep going further up. But as prices continuously going down, we're looking for old sell side liquidity pools that price can have like a cracking correlation with its other sisters. Keep referring to them to sisters, but there's the US 500, US 30, and in order to take price to keep going up higher. In the meantime, it's been creating its own internal liquidity pool, in its own leg. So from like yesterday, we had this that was reacted upon as turtle soup, took us up higher, reacted off intraday buy side liquidity, and then now we're stuck in this consolidation again. um, there are two sides that are currently being supported or in favor of seeing a trading too, so that's not prone to high probability trading, now is it? So if we're gonna have all these bullish breakers fail, I would like to see price just trade aggressively lower. And there's nothing else that's on the sell side business other than these lows that were created this morning. But I'm also talking about the London close old low that we haven't yet referred back to. And it's been such a sloppy way down. So if we're gonna have a miniature sell program, right? And we had SMT here on this high, we could anchor our fibs from low to high here. We wait for what? Expand, close below 25%. Okay, did we have a close below? Yes, we did. And then price retrace back up. Our entry could be a sell stop on the 25% or look for an order block somewhere up here, right there. Okay, so we broke below it, traded up above it. Order block would have been up here, but you could also enter at the stop at the 25% and then let that thing rip down lower to external range to head down to these lows. By London session, it was held back, retraded above again. So, and then now look, now we're back to these levels. So what I'm trying to say with these blocks is that at this certain unit time cycle, I would like to see price react from it so that it can continue aiming for its external range liquidity. Right, so for example, let's take the this red one, right? It says MI down. So to me, I see this as a failure swing. That price failed to create a higher high related to this high back here from 830. So to me, I consider this a failure swing, But the way that price behaved down here, creating that low to high, that to me here, although you see a volume imbalance, I still do see this price action as balanced. So it's a balanced price range. So price should not have any trouble challenging this old area or zone, whatever you want to call it. And if price were to trade back up here again, it has until 9:15, which is the time cycle ending, so that price can react above its old high, which is what I like to see because it's split apart from something that's strong. So I like to see it react up its old high and then continue reaching its external range. The external range for this 15-unit time cycle is the low down here. I'm sorry, excuse me. It's actually the yes, it's this low and then this high. So you see that we've actually broken out of external range low. So something that I've been considering options, or I mean as well, is the treatment of that external range whenever we expand above it or below it. So since we've traded below it at this time, look at the lows here created on US 500, lower low, but look at the lows on US 100, low, higher low. So that would be just suspiciously the reaction of SMT. It could continue to go back up to challenge that old high, or to challenge even this balance price action too, which we've had on the 30-unit cycle, which is a higher time frame time cycle, and that actually takes more of a priority and forms of strength to support price going down lower, if that's what it's going to do. And there's many different variations, right? There's not a lot actually, but it's just a couple of variants, and trying to see how each of them affects price. It's kind of like placing a trap card or a magic card. A card has like a special effect, and so each one of these balanced price action formations each have like their own special effect and can be interpreted as such, so that it can help guide you into seeing where the market wants to go. So over here, that's kind of like how I saw a trade occur here on a believe it was a breaker. Took the block going up here, reacted off 50% of the medium threshold, and then expanded up higher. It was met with high resistance, but then Tuesday opening or Monday opening, it just expanded up higher to reach the ultimate liquidity pool, which is kind of like how I've been trading recently. Just using the structure that has been at play at hand, and how is that structure helping us form a trust or a confirmation that price is needing to reach up to some form of liquidity. That's why I refer back to these old areas of liquidity where price is not traded to yet, or if it has, but it has to be referred to by this market, because other markets like the US 500, US 30 can refer to certain liquidity pools that we haven't yet. And when it does that, there's certain effects that take place, like SMT, but it also makes it like much more trusting for me to trust the fact that we're going to head down to a certain direction. So you see here, in this case, because we've been reacting up these old lows, price should have no problem to continue to keep going down lower, which is a shame really, because I really would have liked to have seen it going up to these highs. What I do like about this SMT low to lower low here is because we tapped not only an important sell side liquidity pool, right? It's 12 a.m. But we also reacted in a way of a SMT, so it could serve to us as a minor retracement upwards, possibly aiming up to the CME open. Doesn't want to get out of that range that we formed, right? Why? Because in the higher time frame, there's lots of balanced price actions that supports the idea that this should go up higher. For instance, we have that failure mitigation block up here, which was the lowest point here is on 1245 from yesterday. Right, so this low, we had a low, higher low. So this low, this high to this low here is all balanced with sell side delivery, buy side delivery. This whole thing is our block. Okay, and we've been reacting above, below it, just below its medium threshold here, and now we're below its medium threshold here. So now there's also some discount liquidity pools reacted off SMT as we saw earlier, and seeing that will showcase us more support speed, right? So we're also at the end, almost at the end of the 9:30 expiration 15-unit time cycle, which will end as soon as the stock market opens up, as well this as well. So I'm just gonna go ahead and get a little ahead of myself, see what kind of price action we have, and immediately I see a low. See how I use that bullish breaker? Now we're gonna see if that will take us up here to CME. I wonder if we'll complete the mission and finally head down to these old lows now. See how there's two sides right now. This is not high probability. Very good. So we've completed that miniature cell program that we had here. Low, high, cross below 25%, traded down, had to retrace back up to that level to acquire more buy side liquidity, okay, because we had some here. Okay, so slowly approaching that London close. I think I've been saying this since like last week. We might be heading down there. It's like so choppy. That's August price action, folks. August. No expansions. July is the most expansions, but okay. So one thing I want to point out too is that we had that first percentage fair value gap at 931. So that here's a SIBI. We didn't even get to consequent encouragement, so that's showing signs of speed. Speed down to where? Down here. Alright, so as you saw that big humongous sell-off reaching out for London close, that was it. That was the reach on liquidity that we were aiming for. It didn't tap on CFDs, but it tapped on futures. You'll probably see this later on in the day. But yeah, it's interesting how it took so freaking long for us to get here, right? Like all the way down here. And we're not seeing a tap on it on NQ. I mean, on NQ we see a tap, but on CFDs we didn't see a tap, so that's interesting. But all in all, I was looking at this, right, referencing two old highs. In between those two highs is an event horizon. So when we traded back up here, I'm sorry, it was this orange line and this yellow line. In between those two is an event horizon. After reacting from the first percentage fair value gap, price didn't even dare to challenge the consequent encouragement, so this is really weak. When forming this new high, if it's really weak and we don't want to re-challenge this, then this would be the event horizon. You see, if we divide this by half, you want to trade a trade above here, above 50%. That's the premium side of things. So then I created that new expansion swing slower. We had this balanced price range discount array that although we wanted to see bullish price action, which we did start to see in the first half, we also had this busy here that was rebalanced. So if this is balanced and this is balanced, we don't anticipate price spending as much time here. We have somewhere to be, right? So price reacted off the consequent encouragement of that, and then see here that we were trading above the consequent encouragement. The bodies are staying within, the wicks are just wicking, and then immediate sell. All right, at the beginning of the 1025 mini macro, heading down over to the London close. So we've definitely tapped here. We just haven't tapped yet on CFDs, but we tapped it here on futures. So I'm gonna just leave it at that there. Call it a good trade, whatnot. But yeah, looking to see what other opportunities lie ahead for the week. This was very interesting to look at, pan out nonetheless. But finally, seeing that breakout just leave us was a good relief. All right, well, hope you have a good one. Hope you like the stream, and I'll catch you guys in the next one. Be safe.